Hi all, welcome to another video. When it comes to investing our money, we all are confused. Which is the best asset class we can invest? Which gives maximum number of returns? So there are so many asset classes that are available for investment purpose, but the risk to reward ratio is different for different asset classes. Hence, I thought I will discuss about different asset classes that we can invest our money and what are the risk to reward, what are the things that we have to check before investing into those asset classes. So let's begin directly. Basically, we have four major asset classes we can invest our money in. I will go one by one. So the four asset classes that we can invest are: first one is equity, second one is fixed income, third one is real estate, and fourth one is commodity. I know that there are uh, cryptocurrency and private equity investments, all sort of things, but I will stick to the first four because that are more understandable and more convenient for retail investors like us. So let's begin by explaining equity. Equity is nothing but stocks of a particular company. So we have around 5,000 listed companies in Indian stock market. We can invest directly to the stocks. That is one way of equity investment. Second way is mutual fund. So we give our money to a fund manager who invest into different companies. So there are different kinds of mutual funds: index funds, bank mutual fund primarily invest on banks, IT sector. So sector wise mutual funds are there. But instead of we directly investing, the fund manager will collect the money and invest into the companies. So these are there are exchange traded funds also, ETFs, but I'm not talking too much about it. Again, those ETFs are also available in public market. We can invest into ETFs as well through Zerodha, any broker that are available, right? So primarily equity, when we say equity, these are the three areas: stocks, mutual funds, and ETFs, where we can invest our money, right? Now let's talk about the different aspects of equity investments. So I have noted down few things. Firstly, let's talk about the risk and return. Yeah, of course, equity investment is risky because depending upon the market condition, stock price can fluctuate for a long period of time. The stock can give negative returns, and because of that, it's extremely risky to invest in equity markets. But at the same time, on the flip side, when it comes to return, there is a possibility of good returns when your investment is correct. I mean, if you had invested in good company or good mutual fund, and if circumstances or situations are in favor, then there is a good chance that you can beat conventional investment asset classes, and you can get good returns like north of 15 or 20% from equity investments. Second point is tenuity. When we consider investing in equity, because it's risky, it's always advisable to invest for long term, right? So minimum of 5 to 10 years is something that we should consider before investing into equity market, because stock market always goes through cycles and it requires time. Any investment that you do into equity, it takes time, and companies require time for revival. If it is going through some difficult situation, or if the market is going through some difficult situation, it takes time for revival. Because of that, it's always advisable we invest for long term, so that our returns will also be, I mean, the negative returns will be negated, and we will be sitting with good returns when we invest for ideally for 5 to 10 years. And third point is liquidity. we should always think about liquidity when we invest our money into any asset class, because tomorrow if something goes wrong, I mean, you need your money back, right? The asset that you invest should be able to provide your investment corpus. And when we talk about liquidity, equity market is the best. Today you invest into stock, tomorrow you need that money, you can directly sell that stock and get your money back. Of course, you need to invest into liquid stock. There are illiquid stocks in stock market where there won't be, I mean, the buyers and sellers are very less. Then there is a possibility of your money get stuck into that particular stock. But ideally, if you are investing into stocks that are liquid, you can immediately sell the stock and get out of it. And the last point is, of course, which asset class suits for whom. Probably I will talk about this at the end of the discussion. So this is about the equity investment, the first type of asset class. Now let's talk about the second type, which is fixed income assets. Those are FDs, corporate bonds, government bonds. Yeah, these are the and debt mutual funds. Yes. So these are the investment options available in fixed income assets. So here when it comes to risk to reward, right? Because we invest into fixed deposit, we all know that FD is like the safest option available in the market, because bank is guaranteeing your money, right? When we invest or when we put your money into FD, bank, you have the guarantee of the bank. And also when we invest into government bonds, the government is the guaranteed owner of your money. Ideally, government bonds are the safest asset class. Same with corporate bonds. Corporate bond is a little bit risky, but still it is okay. Also, same with debt mutual fund. Debt mutual fund is nothing but a mutual fund where the fund manager will invest your money into government bonds and treasury bills and other sort of asset classes. So it is relatively risk free. The return also relatively less. So FD returns right now stands at around 6.5 to 7% range, right? And also debt mutual fund will give you 8-9%, which is much lesser than equity investment. Lastly, liquidity. Of course, these fixed income asset classes are liquid asset classes. Like if you invest into a FD, you can break your FD. If you invest into bonds, you can get back the money immediately. Like you can sell it in the public market. Or if you invest into debt mutual fund also, you can redeem your money immediately. There is no issue of liquidity when it comes to fixed income. Now let's talk about the third asset class, which I think most of the people like, which is real estate. Why I said most people like real estate, because in equity investment requires a lot of research and understanding. Of course, real estate market also requires a lot of research and analysis, but conventionally, if you take, people are most interested, especially in India, most interested in investing into real estate. So what are real estate investments? Primarily land, then residential property, and commercial property. Land, when you buy the land, buy a particular land, and if you keep it, then after a period of time, probably couple of years, probably 1 or 2 years, the land value tend to increase. Then you can sell that land and get a profit out of it. Same with residential properties. Residential property you can give for rent, from which you will get a rental income. Commercial property also, like you can rent your property for shops or other sort of purposes. From there also you will get some rental income. So there are REITs also, like real estate investment trusts. Embassy has REIT. I think there is one more, another company they provide. It's available in the stock market. It's available in any broker. You can directly invest into REITs. So these are the different asset classes under real estate. When it comes to risk to reward, relatively risky, but if you invest rightly, there is a good chance that you will make good return. uh, there is no crystal clear return. I mean, how much precisely, how much percentage of return that you can get. It depends on varieties of factors: where you invest, what kind of property you purchased. Depending upon that, the investment return vary, right? Secondly, tenuity. Of course, I forget to mention the tenuity when it comes to fixed income asset class, right? Over there also, tenuity is nothing but like minimum 2 to 3 years. Anything beyond that. When it comes to real estate, same, 2 3 5 years is ideal when you want to get good return out of real estate. The biggest problem of real estate that I feel is its illiquid nature, right? So suppose you bought a land today, and after 1 year you want to sell it, uh, because you are in need of money. You cannot sell it immediately. First you need to find a buyer. Then so much of discussion will happen regarding the price at which you want to sell. If the buyer didn't, I mean the sell, if the buyer didn't like it, again it's a problem, and you have to go through another buyer. It's like a waiting period. I mean, there is a waiting period for that. You cannot sell immediately, whether it is your land or whether it is your residential property, your flat, your house, or your commercial property, whatever it is. That risk is always there. It's not guaranteed that you can immediately get back your money. Because of this reason, we can say that it's kind of illiquid. And because of this reason, I am not so much in favor of real estate investment, like real estate as an investment option. I'm not so in favor, just because of its illiquid nature. Like, again, it depends on person to person. I am someone, if I want to get my money, I want it immediately. Like if I had invested into something, like what we say as investment is something that we do so that after a point of time we will get good return out of it. At least we need to get back our principal, right? But here in real estate, there is that concern where we have to play the waiting game. So that's a disadvantage I felt when it comes to real estate investment. And lastly, we have commodity. Commodities are nothing but gold or silver or any other instrument where we can invest. Of course, gold can be we can invest into gold as a hedge against stock market investment, or like whenever the government is printing more and more money, it's a big red flag. And you know, anytime inflation can kicks in, and it can have very bad impact into our economy. So to hedge this, people tend to buy gold. Again, when it comes to risk to reward, it's relatively risk free. Of course, there is huge volatility that can come. Again, while discussing about tenuity and risk to reward, it's ideal to invest in gold or silver for a long term, a long period of time, 5 to 10 years again. And the returns are, of course, I mean, these days gold had rallied so much. But yeah, when we talk about gold investment right now, it's equivalent with, the returns are equivalent with stock market, right? But historically, stock market performed better compared to gold. And again, how to invest into gold? Buying ornaments is not a good way of investing into gold. So if you want to invest into gold, there are uh, gold Bs which are available in stock market, which is liquid, right? When we want to dilute our NAVs. So today you invested around 1 lakh or 2 lakh or whatever into gold Bs. Tomorrow we need that money back. Immediately we can sell that in the public market. So extremely liquid, but uh, there are other options also, like instead of buying ornaments, you can buy gold coins. But again, there also the problem is, where will you keep the gold coins, right? Again, you need to keep it in a locker and things like that. It's again very much complicated. The ideal way of investing into gold is gold Bs, which are available in public market. So yeah, now let's talk about which asset class suits for whom. When we talk about investments are extremely personal. At least I believe so, because depending upon the character of one particular person, the asset class in which that person invests varies. For example, if you are someone who is ready to take risk, irrespective of the volatility that can come, right? Stock market is the best investment platform or asset class, because they are not afraid of the volatility. They are ready to take that risk. The risk won't make them uh, fearful. So for such people, and they are ready to take that chance to get that extra return, for such people stock market investment is ideal. And uh, because they are ready to take that risk, they are much more in favor of getting that extra return out of it. But there are other people, for them protection of their corpus is much more important than getting that extra return, right? For such people, I would say fixed income asset classes are ideal, like NFD or debt mutual fund. So when you put your money into debt mutual fund, like ideally it can generate 8 to 9% relatively risk free return. So for those people who are fine with 8 to 9 percentage risk free returns, for them debt or fixed income asset classes are best. And there are other people who likes to invest in real estate, like land or commercial properties. Some people has have very good interest also in investing into real estate. Many people, I have seen many people who buy flats and rent it out so that they will get a rental income. Of course, we can debate about the percentage of rental income in comparison with the price of the flat, right? Or the nature of the investment, how much money they have put into that particular investment. But again, people who are okay with that, absolutely no issues. Real estate investment is also good for them, right? Same with gold or commodity investment. So, like I said, it's not like one fits for all. Depending upon the nature of the person that you are, the character that you are, I would say based on that, decide on your asset class for investment purpose. But there is a catch over here, especially when we are starting out, right? Started our earning, like when you are in your 20s, where you started your income. At that time, it's advisable that you can have some bit of exposure to stock market or equity investment, even though you are very risk averse. Because if you think about long term, right, there is one particular mutual fund called index fund. If you invest into index fund, like there is a catch over here also, if you believe in India growth story, that in 10-15 years India will grow, stock market will grow, then it's always ideal you put your money every month systematically, like in an SIP format, into index fund. Why I am saying is, stock market historically had given 12-13%. No other asset classes had given that kind of return when you talk about 10 to 15 years. So when you are starting out at the age of 20, between 20 and 25, by the time you reach 40, you have a very good corpus when you put your money into index fund. You don't have to learn about stocks or anything. Just systematically put your money into index fund. That's the best investment that you can make when you are starting out, because of the nature of return that it can generate over a period of time. Of course, after that you can look into other asset classes, like of in between you may purchase a flat for your living or uh, whatever. But this is one point I thought, especially when you are starting out your investment, career and investment journey, uh, look for index fund investment. Yeah, these are the four asset classes that gave very fruitful return for retail investors like us. Equity, first is equity, second is fixed income, third is real estate, and fourth is commodity. I hope you learned something new about different asset classes that's available for investment purpose. So I thought I will talk briefly about it and give you some clarity on that. And if you have any questions, feel free to put it in comment section. I am happy to take that up. So yeah, that's about today's video. We'll see you in the next one. Until then, take care. Bye bye.